Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's bullish opening white Mariposa. Prices have very recently been basing themselves on the slowly declining medium moving average highlighted in mauve on my daily chart, and that's currently at 107.51, and earlier capped by the ever so slowly rising long moving average highlighted in gold on my daily chart, and that's currently at 108.28. However, as I said yesterday, and I quote, "This situation right now does not look like it is designed to last." End of quote. And yesterday was a significant day with prices punching up and closing not only over the long moving average, but also the 50% Fibonacci line for 2023 at 108.64. Overall, the market is back well within the broken but possibly now repaired October-based bull channel, currently at 106.86 to 109.48, which is highlighted in green on my daily chart. Now, I still have doubts about this bull channel, as it was good in October and November when it formed part of the wide V-bottom created between July to November. But the break higher in mid-November, though it managed to achieve the primary target for the July to October bear channel at 109.98, the break higher in mid-November has seemingly failed so far to follow on to the secondary harder to reach target X2 in the 111.11 area. And I am wondering whether to retire this secondary target. Overhead, we also have the broken lower bull channel line of the 2023 based bull channel highlighted in dark blue on my daily chart, and that's currently at 109.37, and the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. I'm wondering, given the size of the break below the big blue bull channel line, whether I should retire it or not. For now, I'll keep it on. Finally, I've drawn an earlier early November to early December bullish Andrews picture. Well, not highlighted for now. I don't have any special attachment to it, and I could easily finesse it into a bullish shift pitch hook or retire it completely. Now, so far today, a significant follow-on high yesterday to yesterday's actions. Follow on today to yesterday's actions, up within the free area between the 50% Fibonacci line at 108.64 and the 50% Fibonacci line at 109.44. Cable, aka sterling against the US dollar. A second consecutive unusual pattern yesterday. A second larger key reversal up after the previous session's key reversal up. Overall, the market 2 weeks ago finished its move up from the September to November double bottom and rounded bottom pattern combination, achieving all its targets on the upside. Since that peak, interestingly right on the 50% Fibonacci line of the big June 2016 to September 2022 move at 126.99, we've pulled back a bit to seemingly base on the slowly rising long moving average, currently at 125.02, and with the declining medium moving average just below that, currently at 124.47. The peak and limited decline so far is beginning to make me wonder if the action since late August today may be a potential cup with handle formation. It also may have a possible bullish halfway hesitation pattern intrinsic as part of the handle. I'll know more on these, I hope, by the year end. The one pattern I do know that is in existence is the bow tie formation formed 2 weeks ago of the short moving average, currently at 125.99, the medium moving average, and the long moving average. Now, the moving averages did not enter in the correct order or exit in the correct order, but they did cross over on the 1st of December and indicated a rise immediately after, even if entry and exit were not unanimous. This casts a shadow on the cup with handle pattern, moving it more towards a bullish halfway hesitation idea, though it is still early. Nevertheless, the theory behind this suggests that between 15 to 20 sessions after the crossover from the bow tie formation, so that's between Christmas and New Year, we may see a move upwards in the direction of the moving averages as they crossed over. With the lack of liquidity over this period, I think I might add a few days into the new year just in case. It is not looking great as a concept though right now. It's not looking great. So far today, well, a follow-on higher to the free range between the recent 50% Fibonacci line at 125.90 and the next resistance, which is the September 2020 low at 126.72. And now we're testing this resistance. Euro sterling. A second bullish white soldier and a more than suitable follow-on higher to the previous session's largest bullish engulfing pattern. For the last week and a half, the market has formed a basing action tethered to the March 2022 to date uptrend below, which is highlighted in bright green on my daily chart and is currently at 85.54. The last two sessions were the first attempt higher from that uptrend. Top side now, we have the flatlining medium moving average currently 86.36, as well as the first obstacle, well actually that is the first obstacle overhead with a combination of the short medium moving average combined with it currently at 86.68. And the April 2020 low at 86.69 as the next obstacle. Now, one other item, and it's a significant one to watch. We are set up now for this week to be a weekly key reversal. So if we close on Friday, either over 85.72 or under 85.56, then we'd be on. Anything in between and would have the lesser outside weak pattern. Right now, we are looking at a weekly key reversal up. Now, so far today, an attempt as a follow-on higher to yesterday's action, but so far capped by the flatlining medium moving average. US dollar against the Indian rupee. A counter to the counter bearish harami yesterday to the previous session's immediate countering bullish engulfing pattern and earlier bearish harami. Overall, the market continues, gingerly, to move higher within the September to date bull channel, highlighted on my daily chart in dark blue, and that's currently 82.98 to 83.58. This bull channel is the emergence we've seen from the prior pattern, which is the July to October ascending triangle. This bull channel, this shallow bull channel, is not the most enthusiastic of patterns, but it is still there and ties in well with last week's weekly key reversal up and last month's monthly key reversal up. Now, so far today, a follow-on lower to yesterday's bearish harami, initial gapping move lower. However, that has since been filled in as the market found it hard to push down through the support below from the October 2022 high at 83.27. With the slowly rising short medium moving average currently 83.25 sitting just below. US dollar against the Brazilian real. Yesterday saw a significant immediate countering key reversal down and bearish engulfing pattern after the previous session's key reversal up and the earlier shooting star pattern type 2 bullish. The market pushed higher over the 50% Fibonacci line, the October 2019 to May 2020 move at 496.81, and tested the cap on the previous session of the slowly, very slowly declining short medium moving average, currently at 497.22, and the previously broken upper trend line, highlighted in purple on my daily chart, currently at 497.28 of the August to September rectangle pattern. These were a surprising pairing of resistances, but they were previously effective and were so again yesterday, as prices fell back down below the long moving average, currently at 495.31, and the medium moving average, currently 494.59. Finally halting it, of all places, just ahead of the short moving average, currently 490.99. Overall, the market is still well within the breached but repaired November 2022 to date bear channel, currently 496.39 to 511.30. And that's highlighted in bright red on my daily chart. Now, I'd just like to take a moment to appreciate this bear channel again, as it has been in operation now for well over a year. The only other comment I can give is how very much like a head and shoulders pattern the action since late July today has been. No more than that at this time. US dollar against the Mexican peso. An unusual and interesting key reversal down and second bearish black crow yesterday, following on from the previous session's interesting bearish engulfing pattern. Prices tested up over the July 2017 high, and that's at 1743.62, and the slowly rising medium moving average currently at 1741.15, but turned back down, punching through both, as well as the short moving average currently at 1726.71 below, and halting at some congestion generated just under 1720, even from 3 weeks ago. Further down, we have the combination of the March 2016 low at 1709.23 and the declining neckline, highlighted in green on my daily chart, currently at 1709.05, or the February 2021 to April 2021 move. And just underneath those, we have the April 2016 low at 1703.89. The March 2016 low and neckline combination managed to halt the decline throughout late October and early November, but the long moving average above, currently at 1751.85, is seemingly stopping a recovery at this time. Overall, we are just after the market reaching its downside targets, both primary and secondary, for the September to October bull channel, and I suspect searching for the next thing to do. So far today, well, an unwillingness to head lower, but also to try back upwards right now at this time.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.